Hello, 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 everyone. My name is Jay Turner, founder and CEO of American Hustle Investments. And tonight you are streaming live on YouTube with money. And tonight, what we'll be talking about is learning the tax code. And we have a special guest that will be coming on tonight, which is Yvette the Best. And I will let her introduce herself and just give you a little bit about who she is and what she does and what we will actually be speaking on tonight with respects to learning the tax code. So give us a moment here. We'll be starting shortly for you, and we'll get right into talking money. Hello, 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 everyone. This is Jay Turner, founder and CEO of American Hustle Investments. If you are chiming in right now, we are getting ready to start momentarily. We are just waiting for our presenter to come on. And what we'll be learning tonight is talking about money and learning the tax code with Yvette the Best. So give us a moment here. Thanks for everybody that's coming in and chiming in and viewing right now. And before we start, please, reserve your questions until the end, and we'll be more than happy to answer those for you. All right, all right, all right. Just waiting on Yvette to get on. Um, it's a little bit after 8 p.m. Central Standard Time, so she might be logging in just now. So just give us a few moments here. All right. Going live. Live, live, live. Yvette, are you there? Are you there? Are you there? All right, all right. Still waiting, still waiting. Sorry about the technical difficulties we have in here, but we're going to get it together for you. Hold on tight. All right. Yvette, are you there? Viewers are coming on. Yvette, are you there? Sorry about the delay, ladies and gentlemen. We will be starting shortly, just waiting for Yvette to come on. All right.
Okay, there you go.
There we go. Hello, how are you doing, young lady?
I'm fine.
Great, great. So we have viewers actually plugging in right now, and I'm actually getting ready to go Facebook Live. So just bear with me for a second here. 2, 1. Hello, hello, everyone. Again, just reintroducing myself. My name is Jay Turner, founder and CEO of American Hustle Investments. And tonight we are talking about money. And tonight's guest, we have special to us that is going to teach you everything you need to know about the tax code. So I would like to introduce Yvette D. Best. Mrs. Best, go ahead. The floor is yours.
Okay. Hey, everybody. How are you? You can see me, Jay. Everything is fine.
Everything's good.
Okay. Who am I? My name is Yvette D. Best. I am the owner of Best Services Unlimited. We are the only income tax preparation firm in Fayetteville, Georgia, that is accredited and A+ rated by the BBB of Metro Atlanta. I have 20 years experience in taxation. I'm listed on the IRS website as a tax preparer with credentials. I am an author. I have a book coming out called Maximizing Your Tax Refund in November. And all of that is fine and dandy, but the best thing about me is I love numbers. When people go to sleep at night and they count sheep, I count numbers. I have a passion for the IRS code. When I can't sleep at night, I look up the tax code to see changes that's there to help people win. Because a lot of times people do not realize that a tax refund can actually change your life. For me, the taxes are personal. I have moved women that was in domestic situations to change and relocate to other states with their tax refunds to get out of the circumstances they were in. So I use the tax refund as a money empowerment tool. When you come to me, when you get your refund, the first thing I'm asking you is, what are you going to do with this money this year to change your life? And I know that is not anybody else doing that, because most of the time they just want your check. They give you your money. They get their money that you paying them for preparing it, and you're on your way. You're just a number. With me, I have 650 clients. I know all of their names. I know where I can look them up. They call me. They know my whole family. I know their families. So with me, again, it's personal. So tonight we're going to talk about tax tips for home-based businesses. I know most people that are in myEcon, like myself, may have a regular job. They may have a side hustle. They may drive for Uber, Lyft, or have a business of their own, and they're doing myEcon. But myEcon is set up to be a home-based business to give you the legal way to write off your expenses that are in your home, because you are doing myEcon as your business. So all the expenses that you're already paying for, now you can legally deduct them on your tax return, which is always a win-win. So let me share my screen so we can go to the presentation. Jay, is everything looking good on the screen?
Yes, everything's looking good.
Okay, so let's go to slide number 1. So the benefits of having a home-based business. As you know, you're going to be able to deduct expenses that you would occur anywhere, such as home expenses. Now, this is open to all people. This is not only for people that's in myEcon. This may be people who are selling clothes online. They may be again, like I said, driving Uber or Lyft, because you're going to need a place to be able to, get together all your receipts. And the main thing that you want to know is that you...
Looks like we just lost it, Yvette. You probably want to share your screen.
Okay, is it stop? I'm stop sharing it? Is it still there or is not there?
Yeah, it's not there.
Okay. Is it better if I do like this?
Okay, I see you.
Is it better if I leave the screen?
There we go.
Like that? Okay, I had it in slideshow. I took it out. So now we'll just see the regular slide. Okay. So the best thing to know is that you not only save in income tax, but also self-employment tax. Now, you only get self-employment tax when you're making profits. So as most people know, when you first start a business, it usually takes 3 years for this business to start making money. And the IRS knows that. So don't be afraid to show a loss of your home-based business because you're just starting, but you want to make a rule of thumb that you cannot do this more than 3 years in a row, because then the IRS could come in and say, hey, you ain't running a business. This is just a hobby, and then disallow you all your deductions. So the main thing you want to know is keep in the power of 3. You got 3 years to show a loss before you have to start showing the profits that's from your business.
Yeah, we're not seeing the PowerPoint.
Okay, so you're not seeing the slide at all?
No, but I see you.
Okay, let's see. Because I'm sharing the screen. Hold on. See, if I do entire screen, it's not, you see how it's showing on the entire screen? I'm just trying to show the PowerPoint. Hold on.
Mm-hmm.
So you don't, when I go to the PowerPoint, you don't see it?
Okay, now I see the PowerPoint, and then it doesn't have it like start from the beginning, but I see all the other slides off to the side now.
Okay, so you can see it now.
Yes.
So on this slide, do you see where it says expenses?
Yep, we're looking at expenses now. Go right ahead.
Okay, so that was the next slide. So the first slide, it was just basic information about a home-based business. Just being able to deduct expenses that you will occur anyway that you're doing in the home, such as rent, mortgage, all of those things. So the next slide, which is expenses, you can see the slide?
Yep, good to go.
Okay, so that the expenses have to be ordinary and necessary. Now that is a very broad term, which is left up to interpretation. So you make sure to interpretate those ordinary and necessary expenses to the best of your ability. But please do not have a home-based business and then decide to install a pool and try to write it off as the expense. That's not gonna fly with the IRS. However, if you didn't have a deck and you decided to build a sunroom to say that now this is going to be the area where I'm actually going to conduct business, that would be deductible. So just keep that in mind. Ordinary and necessary, not too elaborate, but within the realms of IRS tax law that allows you to do these type of things. So the next slide is personal versus business expenses. The slide can be seen. Jay?
Yep, good to go.
Okay. I'm going to be checking with you on each slide. So I just want to let you know I'm going to be checking in just to make sure that the slides is being shown. So, of course, you're going to have personal living expenses, and those are not deductible. So let me give you an example of a personal expense that could be a business expense. So let's say you have a family gathering at the house. And at that time, you decide to sit the people down and say, hey, I want to introduce you to an opportunity that I'm involved in, and I want to show it to you. So now you get out, you have your big screen TV, you show the opportunity video, they're there, they're eating. Now, all that food expenses that you paid, groceries to feed the people who are at your house, that is now deductible because you was conducting business while you were having this family gathering at your house. So keep that in mind. When you have these gatherings, use it as a tool. You have a barbecue at your house, use it as a tool to present the opportunity video. So that way, the expense that you have, you deduct that whole barbecue now as a business expense. So business use of the car. Is that slide coming through?
Yep, good to go.
Okay. So, of course, although you may have a home-based business, you still will be driving your car. Now, you may have to drive your car to your client's house. You may have to pick up paperwork. You may have to go to Office Depot, Staples to make copies or any type of thing that you have going on. All of that mileage is now deductible. So, me personally, I recommend an app. It's called myEcon. With this myEcon app, it tracks all your mileage. It's in your phone. It tracks your mileage going to and from everywhere that you're going. And then Basically, your personal miles, you swipe it to the left. Your business miles, you swipe it to the right. But the best thing it gives you is an IRS compliant log sheet that you don't have to do anything for. At the end of the month, it sends you the log. You can print it out and put it right with your business records. Easy peasy. The myEcon is $60 per year for unlimited use. If anybody wants to, I'm going to put in a code that you can actually purchase myEcon and get a 20% discount on it. And of course, as you know, this is also a business deduction. And I mean, it's the quickest way for you to be able to get your mileage log without having to do a lot of work for it. Because when you do use your car for business, you only can do two things. Either A, you could take the standard mileage, which right now they're paying 54 cents a mile for 2016. Or you could take actual car expenses. Now that would include your insurance. I'm jumping a little ahead of a slide. We're going to see it on the next slide. But that's your insurance. If you leasing a car, all of those things. But 9 out of 10, most of the time, mileage is worth more than actual expenses. But it's always good to keep track of both so you can make sure you get the most deductions possible when tax time comes around. Okay, my little roller doesn't want to roll. Okay, so we could this is just the standard mileage. And basically when you choose standard mileage, you just basically calculating all your miles in your car and they times it by 54 cents a mile. And then whatever balance it comes up with, that is what you're going to use as your standard mileage deduction rate. You can use that, but the only thing is when you do that, you cannot take any other type of deductions for actual car expenses except depreciation. And we'll get to that in a minute. So actual car expenses. Jay, this slide is coming through clear?
Yep, actual car expenses, okay. Yes.
I want to ask all the viewers to take a moment to take a screenshot of this slide. Please take a screenshot of this slide and save it. Because when you start using your actual car expenses, it may be larger than the standard mile rateage. Now, standard miles, you know, is standard. You have 2,000 miles, you times about 54 cents, you get a number. But with your actual car expenses, you're going to have to do a little paperwork. So I want you to be able to take a screenshot of this screen so you will know what the actual car expenses include. Now, that is depreciation. It is your license for, well, basically license for the car, lease payments, your registration fee, the fee that you pay for, well, if you're in Georgia, if you haven't got a new car and you still paying ad valorem tax, that is included, as well as gas, insurance, repairs, oil, if you're renting a garage rent, tires, tolls, and parking fees. Now, some people may say, well, I think that's going to be more than the standard mileage. But you have to remember, when you're using your home for business, you only can take a percentage of your home as well as the car expenses. So if you using only 20% of your home for business, you only can take 20% of your actual car expenses. And see, that's what happens. That's why it gets a little bit, I would say, confusing, because people will think, oh, I could just write off, I'm getting a brand new Bentley, I'm paying $1,000 a month, I'm writing that $1,000 off because I'm using it for my home-based business. No, you only can take the percentage of the business use that you're using it for business. So you can't do 20% of your home and then 50% of your car. They're going to be like, that's not good. Just remember, all the percentages have to be in line. So moving right along to my spiel that I talked about, the app for myEcon, keeping a mileage log, because there is a line inside of the tax return. When you take the standard mileage, it asks you, do you have evidence of your mileage? And you're going to check yes. Then the next question they ask is this evidence written? And of course, you're going to have to check yes so you can get the credit. you can even check no, but then that's going to make them a red flag for them to immediately say, let's see the mileage log. So you can keep the mileage log by hand. You write down the mileage on your car when you get in. You write down the mileage that when you get out and what you was doing during that business time. Or you could do something quicker and get myEcon. I mean, they got other apps like Everlance, but they have a lot of mileage keeping apps. But the one thing about myEcon, it is the only app on the market that has an IRS compliant log sheet that you really don't have to do anything for. So I would tell you it's worth the investment to get this app. I use it. A lot of my clients use it because I have a lot of business clients and they love it because now I don't have to be calculating all their mileage, and then I can actually give them a better break on their tax returns because I don't have to do so much work. So for me, it's a win-win. And for you, it will be a win-win because as Jay know, I was talking to Jay earlier about keeping good records. And when you keep good records, it gives you a better leverage when you go in to see your tax professional and at tax time. Because a lot of times your fee goes up because of all the paperwork that you bring in. The easier you make it for your tax preparer to do your return, the lower they can go with their price. So you may have a business return now, you might be paying $700 for it because you're bringing in a shoebox of receipts. They have to organize it, and that's why your price is so high. But if you come in with your business records complete, you can say, hey, all you're doing is basically calculating up whole numbers. Can you give me a better rate? And you may be able to take that $700 return down to maybe $525. But don't tell them I told you that because, you know, I still do taxes. They might get mad at me. So displaying advertisements on the car. Now, if you use your car for both business and personal purposes, you know you're going to have to divide your business and personal use. We talked about that already. But if you do some displays on the car, just keep the receipts for the magnets, or if you actually have logos put onto the car, make sure you keep receipts for those displays because they are fully deductible. And then one thing I forgot to mention, that even when you're using your actual car expense, there may be some receipts that may be 100% deductible, but we'll get a little bit more into that probably on another call because that's a lot. So let's go to home office deduction basic requirements. Now, in order for you to claim a deduction that for part of the home used for business, taxpayers must use that part of the home exclusively and regularly for business. Meaning that the best thing that you can do is if you have an extra room in your house that's not doing anything, it has a door, it's fully measurable, and that is what you use for your business. If you use in another area of your home, like most houses in Georgia has a dining room, and we have a dining room, a dinette set inside of the kitchen. Cordon off that dining room and use that exclusively for business. You don't have nothing else in that room. It's just your dining room table and your setup. Now that full area, you can use that for business. But you just want to make sure it's not an area in your house that's being used for something else, just in case they ever came to check. And here you are, you got your stuff on the dining room table, but with the day that the IRS walks in, there's a little kid eating at the table. They're going to immediately say, that's a shared area. We disallow all your deductions. So you want to make sure that it's an exclusive area regularly used in your business. So now we're going to talk about the office and the home-based business deductions. So as I talked about earlier in the presentation, you have mortgage and or rent. You have real estate taxes, insurance, and that includes renter's insurance, as well as repairs, maintenance, utilities, depreciation, because when you use your home in your business, you take a depreciation on your home, and if there's any casualty loss. But again, the expenses is prorated based on the business use of your home, whether it's 10% of your home, 20%, 30%. I rarely see anyone using 50% of their home for business, but it does happen. But usually 20 to 30% is the going rate. And then all those expenses that you're having now in your home are now deductible. So by you doing that, you're lowering your taxable income. So taxable income is not the same as your gross wages, because you may be paying, you know, insurance, you may have a flexible spending account, and all of these things are pre-tax. So in your 401k, which brings down your taxable income to begin with. So let's just say, let's take an example. If you was making $70,000 a year, and then you're putting $5,000 into your 401k, your taxable income is now $65,000, and then you pay your tax on it. But if you got $65,000 and your home-based business has a loss of $5,000, your taxable income now is $60,000, and you're paying now taxes on $60,000 instead of $65,000. Jay, can you have anyone check in and say, do they get that concept? If somebody could type in yes, that they get that concept of the home deductions bringing down their taxable income, and it's different from the money that they actually make.
Absolutely. They just heard you. So anyone that's actually listening to that question, if you can type in the group chat that if you either understand or if you have a question about that right now is a good time.
Okay. So I'm going to move to the next slide, and that's just computing the amount of the home office deduction. And like I said, the best thing you can do is if you have a room that's empty that you can use, you'll measure the room. So let's say if the room was 20 feet by 20 feet, that's 400 square feet. And if your home was like 1,200 square feet, now that 400 square feet that you're using is basically now 30% of your home that you're using for business. And then all of your deductions would be prorated at that 30%. But most people use either Tax Professional or they use tax software, and they're going to automatically calculate all that in for you. Because when you fill out a form, it's called an 8829. That is the home business use of your home. That's the name of the form. And the first thing they ask is what the square foot of your home is, and then how many square feet you use for business. They automatically calculate the percentage, and then you start putting your deductions in, and it does it all for you. So it's not like back in the days, you don't have to worry about calculating all this on your hands. You just got to make sure you have all your expenses listed out. So you know when you put it all in, you can say, okay, I know that 30% of my total amount is going to be deducted. So when I say keep your receipts, that means for the whole year. Every time you pay your light bill for the whole year, every time you pay your water bill for the whole year, every time you pay the gas company for the whole year, all type of maintenance, the air conditioning, if you get your furnace service, keep all those receipts, because 20 to 30% of that will be deductible through your home-based business. So moving right along to travel and meals. We talked a little bit about the meals in the beginning when I said about the grocery bill. If you have people over to your house or a barbecue and you're introducing the opportunity video for myEcon or anything about your business within a gathering. But if you're traveling with your car or you're traveling to another location, make sure you keep track of the miles on your car when you travel to these other locations, because if you're traveling there for business, those miles are deductible. I give the example that our coach give. If you go to your, say, family reunion and you leave from Georgia where I'm at and you drive all the way to New York, that's 14 hours, about 950 miles. Now, while you get there, you say, hey, everybody, cousins, come in. I got an opportunity I want to address to y'all. And now you play the opportunity video. That 950 miles that you just drove and the 950 miles you're going to drive back, fully deductible, because you was there and you discussed business. So I just want to make sure people getting now how this home-based business is going to work to your advantage to minimize your taxable income and put some more money in your pocket. Jay, can you check in with the group to make sure they're getting that?
Viewers are increasing. I don't see any comments and questions, but I'm sure we'll have some at the end. So viewers, based on the last slide for travel and meals, if you have questions, go ahead and type those in the group chat and we'll get those answered for you.
Now,
I have a question with respects to travel and meals because I did not know that. And that's a great concept with the fact of showing that opportunity video. And now based on tweaking it a little bit regarding getting mileage versus going with the expense route, just show the travel opportunity video, and that mileage now is tax deductible. So that's a great loop.
Like if you travel from New York and back, that's like 1,900 miles.
Absolutely.
Times 54 cents is going to be way more than the meal that you paid to take out a couple of people to show it. That's why I always say to make the most bang for your buck. I had some people over here today to watch the football game. When I went to buy all the food, I kept the receipts. When they was here, it's on a big 65-inch screen TV. Like, okay, hey, while we're on halftime, I got something I want to show y'all. Room full of people showed it. Some people was like they was interested. They wanted to see a couple of more videos to see what's more about. Yvette, we're going to be available. We could talk. That short halftime time that I took to show the video, now all the stuff that I got is now deductible. And that was just today. So I'm going to talk now about entertainment and gifts because they're kind of like one and the same, but not. See, now I know here in Georgia, going to the strip club is a very big thing. People conduct a lot of business in the strip club. I would just be careful about going to those type of venues. I would probably stick more to going to restaurants where you're going to have these receipts, because I'm kind of thinking if you show a lot of receipts for Magic City, they might try to think that you're doing way more in there than not. And that ties in with the next slide, which are gifts. Now, most people will say that it limit gifts to the amount of $25. That's directly or given to any one person during a year, which is true. So what I usually try to do is give away promotional giveaways, whether it's pens or a calendar or maybe a tax organizer, because that's going to be considered my office or advertising expense, and you get more bang for your buck. So like if I bought a promotional item that was actually $50 and I bought 100 of them, if I'm just giving them away and I'm using it as my office expense, they're most likely going to allow that expense as opposed to me saying I gave away gifts that was $50 each. So just keep that in mind. If you want to do some giveaways, say you want to thank a client for signing up with myEcon, they joined your team, or just thank them for doing business with you, and you want to do like a gift card, just keep that gift card to $25. But if you're able to buy an actual promotional item that might be $50, say, hey, no, I was using it as a promotional tool, you're going to get more bang for your buck by doing that other than giving away gifts in this entertainment type of thing. So moving right along to record keeping. Now we talked about all these different expenses and receipts that you're going to be keeping track of. You can literally just get you a folder box and just that has like maybe some index tabs in it, 10 or 12, or whatever bills you get, and start putting it in there. You can get an Excel spreadsheet. Anyone who's in here to call tonight, they can email me. I'll put my email information. I'll have Jay enter it in the box. You can email me. I have an expense Excel spreadsheet that you can keep track of your expenses month by month, and it adds it up automatically at the end, so you don't have to do too much calculations. And again, remember, we want to maximize how we deal with our tax preparer at tax time. And if you bringing in a Excel spreadsheet that got a total of everything that you expense, you have more leverage to negotiate the fee that you're going to pay. So with that being said, you just want to keep good records. And just in the event that the IRS ever said you had an audit, you will have one specific place with all of your tax records that you can immediately copy, scan, fax, and send to them. So you'll be able to say, no, my business, I'm running my business the way it's supposed to be, and here are all my records. So let's talk a little bit about how long you should keep your records. Now, I made this slide a couple of years ago, but they haven't changed. And at that time, the IRS was only going back 3 years. So I told people to keep them for 4. But now they changed the rules about 2 years back, and they actually going back 7 years. So my rule of thumb is keep your tax records for 7 years, if not forever. Now I know people are like, forever, God, you know how long I could be keeping taxes? You talking about keeping these tax records forever? I'm gonna tell you why. Because in the tax code, and I forgot what section, the IRS has 7 years to go back on your return. However, if the IRS decides to say for any reason they didn't like something they saw on your returns, they have unlimited domain to go back over any years they want to pull and look at. So you say they looking at your 2015 return, and now they decide to go back. We want to see 2005. That's 10 years now. You may not even have that return. So now you don't even have any leverage to fight with them, because you're like, I've been got rid of that information. And that is what they're banking on. They're banking on that you're not going to have anything to dispute with them. So that's why I say 7 years, if not forever. And if you know they have all these document things where you can scan your information into a cloud system, neat receipts to share it on your computer, if you want to actually get rid of the hard copies. But I would tell you, I would scan it and save the paperwork. Find a nice little dry area in your basement to put your paperwork in a box and seal it up and put it in the basement. It will be the best thing you can do to always protect you, because, you know, every time when you're doing business and you start building, you never know how the devil might try to work against you. So you can always make sure you got all your ducks in a row, because that's how they do big business. How do you think that every time there's a scandal, they take, immediately you hear about them shredding documents? Because they keeping them. So make sure you have your documents too.